All right, people, after we've learned many of the strategies or any of the strategy that you're going to be using for your trading career from now on, it's time for us to actually start training your money management skills. Okay, now 70% of the success that you are going to have as a day trader is going to come from your money management skills, not from the strategy. 10% comes from your strategy, 10% comes from luck, which is always in there. 10% will come as to how much you're investing, and 70% will come from your management of money. That's bottom line. That's the way it is. I know it sounds tough, but the most important thing is that I'm going to train you right now as to how to improve your money management skills. So this training is called Money Management Principles, and it's going to be super interesting, and you need to watch this training in order to succeed with their day trading. So let's go ahead and begin. What is money management? This is like the first topic, right? What is money management? I'm going to give you a recap right now, or the set of features that involve in money management, so that you understand it. The first one is controlling your losses more than your wins. That's money management. Controlling your losses more than you control your wins. Now, I know that might not make that much of sense, and you're like, whoa, what do you mean controlling my losses? Yes, the rule number one for Warren Buffett as an investor is don't lose money. Rule number two is don't lose money. Well, according to Warren Buffett, number two is actually repeat number one. But I can tell you rule number three is don't lose money. So never lose money. Control your losses more than you control your wins. Okay? And I'm going to explain you how to do it. Number two thing that is money management is focusing on what's really important. And we're going to go what's really important in just a little bit. Number three is controlling our emotions. Okay? Controlling our emotions. And number four is the differentiate good and bad emotions. This is what we're going to disclose in this specific training. Are you excited? I know you are. And I know you're going to learn a lot. Okay? So make sure that you're taking notes, because this is going to be a very powerful training that is not available out there. It's not available on YouTube. It's just available here. So take note. Controlling losses more than wins. Now, this is controversial, and you might be like, whoa, what do you mean? In a binary options, 60% win rate is enough. If you do the math and you place 4 positions per day, or let's say since it's 60%, 5 positions per day, and you win 3 and lose 2 with an average of 70% return, you will make a small increase in your account every day for like 1 or 2%. You might be saying, whoa, that's not good money. Yeah, but you're still making money. So 60% win rate is enough. Okay? So you need to lose no more than 40% of your trades, and you're good to go. Obviously, we aim for something more, but here comes the difference. In Forex, the win rate is not the most important aspect. And do you know why? Let me show you right now a few of the trades that I have placed. I'm placing right now, I have 3 pending trades for USD, CAD, Euro, USD, and AUD, USD. And I have 1 trade placed yesterday that I ended up with 55 pips won. My actual trade was for like 30 pips won. But what happened was that it jumped to 50 something pips. So what I did is that I actually moved the stop loss to a profitable level. So now the new stop loss was actually at a level where I was still making money. Now you might be thinking, okay, so what does that mean? What do I do with it? You make sure that you're not going to lose money, and you increase your profitability as the take profit. So what I did is that instead of aiming for 60 pips again, I aimed for 80 pips. Now, this time the trade retracted and I ended up with 55 pips won. But right here, I'm going to do the same. This is going for 42 pips. the target is actually 71 pips. But once I get to 50 or 60 pips in profit, I'm going to set the take profit all the way to 100 pips, and I'm going to upgrade my stop loss, and I'm going to take it like around 40-45 pips. So in the worst case scenario, I'm going to make 40 pips in profit. So that's $20, for example, right here, right now in this specific trade. And my balance right now is at $468. If I close all of my trades right now, my balance would be $53 more, so I will be above $500. And these are the first trades of the month, and today is August the 4th when I'm recording this video. So that means that in 4 days, I'm going to be making, let me see, 28 plus 53. If I close it right now, plus 30, it would say $80 out of $400. It's pretty much like around 25 to 30% increase in my account in 5 trades. Now, obviously, right now we're looking at 100% in the money rate. Well, at the moment, right? Because it's not finished yet. But in Forex, winning is not the most important aspect, but to control your losses, to measure your losses. So for instance, in Forex, you can set all the trades for a take profit of 30 pips and a stop loss of 10 pips. Now, this is just an example, but take a look at the difference. If you win, you make 30 pips, and if you lose 10 pips. So if you win half and lose half of your trades of the week, that means that at the end of the week, you're going to have 5 trades with 30 pips, that's 150 pips. And 5 trades lost with 10 pips, that's 50 pips. In average, you will have 100 pips in profit. So in Forex, the win rate is not the most important thing, but how you're going to manage the take profit and the stop loss. Okay? Or losses control or negativity. You need to understand this. Our losses, like basically what they do is that they reinforce. We remember that we talked about this in the mentality part. We reinforce those connections in the brain that will basically remind you all the bad things that all your friends and family members have told you in regards to day trading and how is it a scam and so on and so forth, right? Do you remember that? And I apologize, I think I didn't show you all the pips over here in my account because my camera was actually covering it. Hopefully you can see it now. I'm going to move my camera to this area so that we can see everything. Okay, cool. So now I can just go ahead and move it back. So our losses control negativity. So what happens is that whenever you have a loss, you usually remember the bad things that people told you in regards to day trading. And instead of focusing on the positive part, your negativity starts to be reinforced. So when you lose a trade, you start thinking, maybe this is not for me. Then you lose another one and you're like, well, no, this is not for me. Then you lose another one and you're like, yeah, I'm quitting. So our losses like basically control our negativity. However, and this is super important, our wins confuse our emotions. And we're going to just talk about this right now in the next slide in regards to emotions. But the wins basically confuse our emotions, and it takes us to a positive mindset that is way more dangerous than the negativity. Our negativity makes us a little bit more careful and more aware, and we tend not to take important steps because we're afraid. And when we have too many wins, we usually tend to get so positive that we end up placing more trades than what we should. Does that make sense? Like I said, we're going to disclose this in a couple of more slides, but right now, this is what controlling losses more than wins means, okay? In binary, 60% win rate is enough, so focus on not losing more than 40%. In Forex, win rate is not the most important thing. Focus on losing less in the trades that you lose and winning more on the trades that you win. Our losses control negativity, and our wins confuse our emotions. What is really important? In two sides. Profit control versus win rate control. Which one is more important? Profit control versus win rate control. It depends, right? In binary, win rate is more important, and in Forex, profit control is more important. So whenever you're trading either in binary or Forex, focus on what is really important. It's different binary from Forex. Don't fall for that 90% in the money rate for whatever signal service or whatever in Forex. No, take a look at the pips amount that they actually giving you. That's the most important thing. And percentage increase versus profit amount. This is when it comes to balance. Which one is more important? Percentage increase or profit amount? It's percentage increase. Why? Because if you're targeting to increase your account, you need to have control of the percentage that your account is increasing. Do you know that 1 to 10% increase in a monthly basis is super good for Forex? Obviously, we target sometimes for a little bit more, but 1 to 10% is good. So if you have $100, if you end up with $110 at the end of the month, you're good. The important thing, remember, rule number 1, which was it? Don't lose money. Rule number 2, don't lose money. Rule number 3, don't lose money. Okay? Now we are going to focus on controlling emotions. And look, this is one of the hottest topics out there in the trading world. And you probably even looked for this on YouTube. Like, how do I control my emotions? What should I do to control my emotions? And in this specific training, I'll give you the steps that you need to take in order to control your emotions. Bottom line, if you do this, you're going to control your emotions. And this is not a secret that is out there and nobody does. No, this is what I do. And I know it works for you. Okay? Number 1, discipline versus instinct. Oh, you know what? I have a feeling that this trade is going to start dropping. So I'm going to go for it. No, that's not the way to do it. Discipline is way more important than instinct. Do you think Warren Buffett is just guessing what he feels is going to drop or is going to jump? Of course not. He's actually looking at what the patterns are, what the indicators are, so that he can enter. Well, he does more fundamental analysis than technical, but we as Forex traders, we do technical analysis. So respect the indicators that you chose. If you're choosing a strategy, respect that strategy and only enter a trade when the strategy meets the requirements that you know it needs to meet. Does that make sense? Don't go and just think, like assume that just because you have a feeling that trade is going to take that direction because you're just going to end up losing money. Okay, that's number 1. Number 2 is control versus suggestions. Look, just because Facebook released a new app for a phone, that doesn't mean that price is going to start jumping, right? Just because Donald Trump or whatever president you're watching right now in the States gave good news in regards to dollar, that means that dollar price is going to start getting value and euro is going to start dropping. No. Go ahead and have control over your trades. How do you have control over your trades? You don't go with suggestions. You have indicators. You have a strategy. You follow it. You follow the patterns. If you already entered the trade, let me show you an example real quick in here. So I took this long-term trade for a swing trade for USD CAD. If we go to 4-hour candles, you're going to realize that I actually enter around this area. I give out this signal, and you've seen that the price has been jumping all over the place. And probably I would have thought, you know what, I'm just going to get out of this trade. However, out of this trade, I have made a total pips so far of 131 pips. 131 pips that I've made in this trade. Now, if you jump to 15-minute trades, you're going to realize this, that at many moments you saw that the price was jumping, and the price even went away. Let me see, from the entry point, it went over to 27 pips. Do you know that a lot of people actually get out of this trade just because he went in the opposite direction for 25 pips, 27 pips, instead of actually continuing in the same trade that they had? Did you know that? And do you know why is that? Because people go with suggestions more than they go with control. You need to focus on the trade that you place. That's the trade that you chose, and you chose it for a reason. So if you chose it for that reason, you need to have control over that trade. Okay? Don't focus on what people say. Don't focus on suggestion. Control over your strategy. Number 3 is small loss versus risky trades. And this is a huge, huge, huge topic. What is a risky trade? Do you know what is a risky trade? A trade where you don't know what you're doing. That's a risky trade. Investing is risky, said Poor Dad. Not having enough education is risky, said Rich Dad. Both of them were right. Investing is risky when you don't know what you're doing. When you know what you're doing, is not risky. So we're not talking about risky trades. We're talking about small loss in certain trades. So if you placed 5 trades today, and out of those 5 trades, you actually lose 3. And on those 3 trades, you lost 20 pips. That's 60 pips lost. But in the 2 trades that you won 150 pips. That's 300 pips minus the 60 pips, right? 240 pips in profit. So you're good, right? And even your winning rate is 40%, but you ended up with a lot of money. Simple as that. Risky trades, we don't take risky trades. We take small loss trades. We always focus on small losses based on our technical analysis. We know what the direction of the pair is, but we focus on the small loss before jumping into a risky trade that might return with a lot of money. That's just going to play with your emotion. Okay? And number 4 is too much information versus the right information. Look, I've seen a lot of people with like 30 indicators and bunch of screens and looking at all over the place, and they don't know what they're doing. And they're like, yeah, the more information, the better to enter the trade. No, that's not true. You need to have the right information. You need to have the support and resistance levels. You need to know what the trend is. You need to know what a retraction is. That's all you need to know in Forex, right? In binary, all you need to do is just the support and resistance. And then you have good trades to enter, or RSI if that's how you're trading. Does that make sense? So too much information is not good. The right information is good. Don't be overwhelmed. Okay, just get the right information. And now we're gonna differentiate your emotions, and this is kind of a top secret topic. So what you're about to learn right now is gonna change your trading life forever. Are you ready? Ask yourself this and answer it right now to yourself. Which one is worse? Good emotions or bad emotions? And you're about to know the truth. Probably since right now you're going against logic because I said you were going to be surprised, you say, yeah, good emotions. And let me tell you the difference. Bad emotions give you negativity. We covered this before. Basically, make you careful, and sometimes when we are too careful, we tend to get too much information instead of the right information. We tend to go with suggestions instead of going to control. You know what I mean? That's what negativity does. However, good emotions give you euphoria. Do you know what euphoria is? It makes you feel like you are better than anybody else. It makes you feel invincible. It makes you feel like you can't lose. It makes you feel like you know the market very much more than anybody else and you can beat the market. Do you know that in Forex, we're competing against the smartest people in the world? Bankers. You know that? So you're not invincible. I'm not invincible. And nobody is invincible. Nobody is perfect. So the problem is that you place 1, 2, 3 trades and you won them 3. What do you think is going to happen to the fourth one? You're gonna think, and are you sure that you're gonna win it? And you probably are gonna end up putting more money than you should. Does that make sense? So which one is more dangerous? Look, when you have bad emotions, when you have negativity, the worst thing can happen is that you take bad trades and you don't take the good ones because you actually don't know, like, if it's gonna be a win or not, and you're too negative. That's the worst thing that can happen, which is not good, but it's not the end of the world. But with good emotions, what happens is that you end up wiping up your account. You end up thinking that, yeah, you can be a millionaire because you're super smart, you're perfect, and then you end up placing over more trades or more money into those trades. And math suggests that the more trades you place, the more trades that you lose. Right? That's math. The more trades you place, the more trades you lose. So you instead of placing just the right trades, you start placing the wrong trades as well. Too much with too much money, and you end up wiping up your account. Yeah, good emotions are way worse than bad emotions. So just to give a summary or recap on what is money management, and I hope you really take advantage of this training. Controlling your losses is more important than controlling your wins. That's bottom line. Focus on not losing more than winning. Okay? And you're gonna survive in this market. And if you survive enough in this market, you're gonna end up making money. Eventually, you're gonna end up making money. Okay? So control your emotions is actually part of it. Controlling your losses more than controlling your wins. Focusing on what's really important. Don't waste time on dumb things like, oh, I made $2. Okay, what percentage does that represent? Focus on the percentage instead of the profit itself. And it's the same thing with a binary. Focus on the win rate more than you focus on how much money you're getting in return. Okay? Focus on what's really important. 3 is control your emotions. The way you control your emotions is basic. Just follow the same pattern. You don't really need to create new strategies every day. No. Just make a habit of doing the right thing over and over, and you're good to go. Control over suggestions. Okay? And focus on, like, try to identify the euphoria and the good feelings of the good emotions instead of the bad emotions, and know to differentiate the good and bad emotions. Okay? Once you dominate these 4 topics, I guarantee you your money management is impressive, is what I use, and it's been giving me thousands of dollars. Okay? So I hope this training really helps you with your money management skills.